Well, hello everybody, and welcome to another edition of Hawk's Scan Sentry Report. I am Hawk Arps, Vice President of Jan Arps Traders Toolbox, and this is the Scan Sentry Report for the week beginning Monday, September 23rd. I'd like to wish all of you in the Northern Hemisphere welcome to autumn, and those of you in the Southern Hemisphere and the Down Under, a welcome to spring. I hope that this year turns out good for everyone. Let's go right to the charts and see what the technical analysis shows us for the upcoming week. I would like to begin by looking at our spreadsheet with synthetic symbols designed to show the strength of different sectors and other ETFs relative to the S&P. For those of you not familiar, again, I have created some synthetic symbols based on ETFs and comparing them all to the S&P, and I have applied our Scan Sentry tools to this eSignal watch list. Here you can see we have the triple trender, the radar 3, some trend exhaustion 1 based on the radar 2 price leader, fear greed tools, etc. And the interesting thing I note this week is that in response to the announcement that surprised many that the Fed is likely to continue the quantitative easing, we saw that many of the ETFs that are based on dividends and treasuries are still quite weak. But with the continued influx of money into, well, let's say, to the banks, what I noticed was when I look at all of these ETFs that are based on other regions, other countries and other regions, now all of my triple trender scores are above zero and their cells are mostly green. To me, this indicates that the free money they're giving away now is heading towards other markets, that the markets in these other regions are gaining strength instead of the American index markets. Don't get me wrong, we are still making higher highs in the American indexes, and we're clearly in a bull trend, and there's more money to keep fueling that trend. But I'm going to be looking to invest in some of these other markets. Particularly I'm looking at Brazil and European markets, and a lot of it based on my analysis that these markets are the ones that show strength relative to the S&P. Even though looking at our watch list we don't believe that the fresh batch of newly printed U.S. Treasuries donated to the big banks is necessarily going into the American equities, let's take a look at the S&P anyway. We see clearly we're still in a nice rally, trending upwards. We do have a little bit of a divergence in radar 1 buying, fear greed here. However, I would say that there's still significant buying here in radar 1. It's not enough to think that the buying has run out of steam yet. I do see a little slowdown in the acceleration of that buying, though, especially at the most recent high, a little divergence in radar 2. So we do have this nice little pullback here to the automatic trend line drawn from the previous high right near 1700 there. We're seeing buying. Yeah, we're seeing a little bit of a weakness in that buying. Let's look at some of the other charts I typically look at here when I'm doing my analysis. I like to look at the 100,000 share. Here we see our support and resistance lines drawn, and the divergence is much more easily seen here in the 100,000 share chart. As the price has been moving up, we see clearly how the buying strength has weakened with each thrust. And note how each of these pullbacks all come back to these previous support and resistance line. I don't even know how far back this line goes, but you can see that we pulled back to this earlier support line here, and another support line right here. We pulled back to it in the most recent pullback. So I see a significant selling actually right here in the fear greed. So there's no divergences there. I wouldn't be surprised to see the selling continue. Perhaps we'll find a close of this gap I don't know how far down it's going to go. It could go up, but the technical analysis is showing that we have not seen the end of this little pullback. Let's take a look at the 50,000 share, drilling down a little closer here. Again, we saw divergences on the way up, especially this last move up. We had a nice trend exhaustion 3 before the market turned around, and now we have a trend exhaustion 3 to the upside. So this support level may hold. However, again, I see a lot of buying, a lot of selling in the fear greed indicator here. So I'm not convinced that we've seen the bottom yet. We should at least see enough selling to test this level again with weaker Radar 1 fear greed readings. So all in all, I would say that as far as the S&P is concerned, I'm looking for a little bit further pullback before the bull trend continues. Taking a look at the gold market, it is typical whenever the Fed makes an announcement to expect to see some kind of reaction from the gold market, especially when it's an unexpected announcement like the recent announcement that there was not going to be any tapering of the quantitative easing. Naturally, we saw a big bull bar on the gold market. It pulled all the way back up to this uptrend line that we drew with our automatic trend line drawer. However, it bounced off of that and is now pulling back to the downside. We're currently resting right here at this support level at 1322 from the previous low. You can see we've tested that level a few times now. And although the trend strength index is bullish, the triple trender is not coordinated bullish nor bearish. It's more bearish than bullish at this point. And I'm still seeing a lot of selling here in the Radar 1 Fear Greed indicator. So my prediction for the gold market is likely to go sideways, actually. I don't have a clear bias. I know a lot of people are bearish on this market right now. I, for one, am going to hold on to short-term trades during the day and wait and see until I find some more significant technical indicators to show me what the long-term orientation of the gold market might be. Let's take a look at a shorter-term chart here and see what that shows us. You can see we have a pretty strong downtrend here that the market keeps testing. However, we have a very significant support and resistance level here. We have, what, 4 or 5 support and resistance lines all right here in the 1325 area. So after identifying this bearish divergence, which ended up reversing the orientation of price, we've seen a little bit of trend exhaustion signals, the deep dip double and the trend exhaustion 3. We're currently at a significant support level. We're still seeing stronger selling than buying, so I'm not ready to go bullish yet. However, if I see this selling start to really peter out at this level, or again, you have a lot of selling at this next level too, 1307. That might be a good entry opportunity to the bullish side. Looking at the daily crude oil market, I see a market that is range bound between, let's say about 103.5 and about 109. Seems to be kind of bouncing back and forth in that range. I do see a bit of a bearish divergence here, weakening buying pressure as this range continues. So unless we see a significant thrust in this next bounce to the upside, I would say the next move has more of a likelihood of going to the downside. In fact, we have just now turned our Radar 3 trend strength index to bearish, and we're seeing a little bit of selling pressure here. So the triple trender is still bullish. We're still going sideways, but if we do break out of this box, it seems to me like the daily chart has a stronger tendency towards to break out to the downside. Now let's take a look at a shorter term chart. Here is the 6,500 share crude oil chart, and you can see we've just found this support level again. Yet at this point we still see quite a lot of selling. We haven't really seen any divergences down here at this level yet. Although we get a few trend exhaustion and divergence signals right now. So seems to me that we are at a support level in a downtrend, which is an opportunity to neither buy nor sell. You might look for it to bounce back up, maybe take a very short-term trade to the upside, but really I'm going to be looking for the next move to the downside. I'm glad you spent a little time with us to look at some of the charts and technical analysis of some of these global markets this week. Once again, I want to remind you, as always, Arps Trader's Toolbox is not recommending that you buy nor sell anything. We are not licensed to be financial advisors in that way. However, we are licensed to create some of the best technical analysis tools that you'll find on this beautiful planet Earth, and we hope you avail yourself of the technical analysis that those provide. So, with the help of good technical analysis and sound money management and trading discipline, may the trend be with you.